Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive, your shortcut to getting, well, truly informed. Today, we're diving deep into a fresh stack of sources. These are all dated July 6, 2025, so pretty recent. Our mission, as always, is to unpack what's happening, the latest, sometimes surprising stuff in crypto, global regulation, and also some really cutting-edge tech that's already changing things. We want to cut through the noise, find that signal for you, give you those aha moments. Okay, let's unpack this.
Yeah, absolutely. And what's fascinating here is how all these different areas, digital assets, smart cities, AI, they're starting to converge. They influence each other in sometimes unexpected ways. So yeah, this deep dive will look at the crypto markets, key regulatory moves from the US, the Philippines too, and then some really interesting innovations in crypto itself, but also broader AI and tech globally.
All right, let's jump straight into the crypto market then, because, well, it's a landscape of contradictions, isn't it? The reports we have as of today, July 6th, they show Bitcoin and the wider crypto market haven't really seen that big pump some were maybe hoping for. And Ripple, XRP, it's actually dipped below the $3 mark.
Mm-hmm. And if you just look at the ETF data initially, it looks, well, cautious. We're seeing negative outflows, right? About $768.6 million, which usually suggests investors might be losing a bit of confidence or maybe just taking profits, after recent gains. So you might think sentiment is cooling off, but that's definitely not the whole picture.
Exactly, because when you dig a bit deeper, there's this other story that, honestly, it surprised me. Despite those ETF outflows, these short-term ones, corporate treasuries, they're still actively buying Bitcoin and Ethereum.
Mm-hmm.
We actually saw one firm make a huge $3 billion Bitcoin purchase just recently. And some analysts are calling the withdrawals temporary, like they don't signal a fundamental problem.
And, one of the articles we looked at brings up something pretty controversial. It claims that notorious information from the Bureau of Labor Statistics There was often debate about their data, and the Fed's decision back on July 30th to keep interest rates steady are actually key factors hitting crypto prices right now. The argument is basically that issues with economic reporting, maybe perceived inaccuracies or political angles, are unsettling the market.
Yeah, and adding to that, this same source gives a very specific take on the U.S. economy under the Trump administration. It talks about over $17 trillion in investments coming in because of tariffs, and July seeing record tariff fees. Now, this source claims pretty strongly that mainstream media is ignoring this positive news, focusing on fake news instead, and it even blames that media narrative for the crypto downturn. Now, obviously, media influence is a thing, but how do we square such a strong claim with the bigger picture?
Well, that's a really important question for us because other sources in our stack give some crucial counter evidence. So despite those claims about negative sentiment and media bias, U.S. crypto ETFs, they actually pulled in a record $12.8 billion in inflows just in July. That's huge. Bitcoin ETFs got $6 billion of that. Ethereum, $5.4 billion. So this massive difference in data, it's not just conflicting. It points to something deeper, like a market split. It suggests that, yeah, maybe some people are getting out of short-term positions or reacting to headlines, but there's this significant chunk of institutional money, big money, that's quietly buying in. It signals long-term belief, right? So this bizarre matrix isn't just numbers contradicting numbers. It's like totally different investment strategies clashing right now.
It really is a bizarre matrix. So many conflicting signals. Yeah. While we're sort of grappling with that, let's look at stablecoins because there we're actually seeing volumes improve. TUSD is $1.27 billion. Circle's USDC, that's $12.45 billion. And FDUSD at $6.76 billion.
Right. And that increased stablecoin volume, what it often signifies is investors parking their cash. They're holding something stable, basically waiting, ready to jump back into Bitcoin or Ethereum when, the news looks better or the market turns. It's more a sign of strategic waiting readiness, not necessarily a full retreat from crypto.
Okay. And the overall market snapshot. Global crypto market cap is down about 1.5%, sitting at $3.79 trillion. Total volume around $126 billion.
Yeah, and what's particularly interesting, maybe part of that bizarre picture, is total value locked, TVL. That's the money locked in DeFi protocols. It's actually trending down $135.94 billion, which normally means less capital engagement, right? But at the same time, we're hearing reports that non-crypto firms are buying Ethereum and becoming validators. Now, that could potentially push TVL up, but without reflecting actual user adoption by individuals. It's a weird disconnect. Institutional moves versus maybe retail engagement. Though amidst that, there's a small uptick in TVL linked to real-world assets, RWA. That's at $12.87 billion. That kind of stands out against the overall trend. It's an interesting growth spot.
Gotcha. So just to lock in the prices as of today, Bitcoin around $114,920, Ethereum $3,650, and Ripple XRP $2.96.
Yeah.
Okay, let's shift gears now. Let's talk regulation. Some critical updates here, starting in the U.S., with what some reports are calling positive updates from the SEC under the Trump administration.
Yes. The SEC provided some much-needed clarity around liquid staking. They basically said it doesn't involve a security offering, but with a key condition, as long as the providers are only performing administrative tasks.
Oh.
The nuance is really important here. Those receipt tokens you get when you stake. They aren't securities if they just represent your ownership of the staked crypto, and the rewards come directly from the underlying protocol, not from the staking provider managing things or promoting it as an investment. It's about separating the tech facilitation from investment management.
Right. So this guidance, it gives a clearer path for those passive, non-promotional staking services. What it means for you listening is that these kinds of services don't need SEC registration. Unless, of course, the structure changes, like if they start managing funds actively or promising specific returns.
Exactly. And this clarity affects different players in different ways. Protocols like Lido, for instance, which are decentralized, non-custodial, they just help you interact with the protocol. They're likely fine under this guidance, exempt. But for a centralized exchange, say Coinbase, it's potentially more complex. The SEC might argue that if Coinbase promotes high yields or manages the staking process heavily behind the scenes, maybe that does look like an investment product. So transparency is key. Sticking close to the protocol itself, it's all about figuring out how these new things fit into the old rules.
Okay, moving across the globe now to a less positive regulatory story, but definitely impactful. One source highlights a big move by the Philippine Securities and Exchange Commission. They flagged 10 major exchanges for operating without a license there. Include some really big names: OKX, Bybit, KuCoin, Kraken, MEX, BitGit, Forex, CoinX, Bitmart, and Potenx.
Yeah, and the consequences sound pretty severe. The Philippine SEC isn't messing around. They're talking legal action, cease and desist orders, even criminal complaints. And they plan to work with Google and Apple to get the apps blocked, stop the marketing within the Philippines. If you connect this to the bigger picture, it really underscores this global trend, right? Regulators everywhere are saying, hey, centralized crypto companies, you need to follow our rules, get licensed here. It's a real reminder that regulatory uncertainty or sudden certainty like this can hit hard and fast.
And the crucial takeaway here from these reports, directly for you listening, if you use any of those flagged exchanges in the Philippines, the strong advice is to get your funds out, move them to your own personal wallet. It really brings home that crypto saying, not your keys, not your crypto. It's not just a slogan. It's playing out right now. Okay, let's pivot now to innovation, looking forward, both in crypto and broader tech. First up, something interesting in the U.S. The Bitcoin Policy Institute's Congressional Fellowship Program.
Right. The idea behind this program is pretty straightforward, but potentially very impactful. They want to place Bitcoin experts directly inside U.S. congressional offices. The goal is to give lawmakers access to real-time, nonpartisan expertise on Bitcoin stuff. Everything from energy use, taxes, national security, financial rules. There's apparently an urgent need because lawmakers are increasingly looking at crypto, but there's still, frankly, a lot of misconceptions about Bitcoin floating around D.C., so it's about bridging that knowledge gap.
Staying in the U.S., there's this new bank called Slash. They've just launched their USD stablecoin through Stripe. Now, here's the core feature, the really interesting part. It lets businesses send, receive, and hold dollars using stablecoin without needing a U.S. bank account. That's potentially a huge deal for cutting down on foreign exchange fees, speeding up settlements, especially for international business. They're apparently already processing $1 billion a year, and they have plans for yield accounts, crypto card spending. It's a really cool example of TradFi and crypto coming together to solve a real problem.
Definitely one to watch. And shifting back purely into crypto innovation, several reports mention the growing hype around DePIN tokens, that's decentralized physical infrastructure. A lot of this buzz seems linked to the whole AI narrative that's so big right now. These tokens basically incentivize building and running real-world infrastructure, like Wi-Fi hotspots, data storage, sensor networks. The top 5 by market cap right now are Beatonsoar at $3.26 billion, Internet Computer Protocol, ICP, at $2.71 billion, Render at $1.82 billion, Filecoin $1.59 billion, and let's see, IoTeX Network at $749 million. It's a sector that's really gaining steam as people see how crypto could power the physical world.
Okay, let's widen the lens even more now. Look at tech advancements beyond just crypto, starting with a really concrete example of AI in daily life over Dubai.
Yeah, in Dubai, there's this partnership between Salik PARKONIC and Dubai Holding. They're launching the region's first fully autonomous AI-driven parking system. It's massive, covering 36,000 parking spaces, both on-street and off-street, in major communities. It fits right into Dubai's Smart City 2030 goals. The system gets rid of tickets, barriers. It's meant to be a totally zero-interaction, contactless experience. Uses advanced AI, automatic payments. Just imagine how much smoother that makes parking.
The benefits seem pretty clear, right? Reducing traffic jams, helping with net zero carbon goals by optimizing how cars move, and even setting the stage for autonomous vehicles down the line. It's a really significant step towards a truly smart city. Not just apps, but deeply integrated AI infrastructure.
Absolutely. And then shifting over to Saudi Arabia, Huawei Cloud just held its 2025 developer conference in Riyadh. The main focus there was really empowering local developers aligning with Saudi Vision 2030. It brought together developers, startups aiming to boost Saudi Arabia's digital infrastructure and sort of its whole intelligence ecosystem. They offered training, tools, global certifications. They also launched something called CodeArts, a platform for secure cloud-native development, supporting tons of programming languages. It's clearly a strategic push to build up their own tech talent.
So after all that, what does this all mean for you listening? We've covered a lot today. From the crypto markets, confusing signals and contradictions, to major regulatory moves, those innovative projects bridging traditional finance and crypto, plus these really fascinating real-world AI applications popping up.
Yeah, it's a lot to take in. So maybe the final thought to leave you with is this. Given these conflicting crypto market narratives we discussed, the constantly changing regulatory scene in the US and globally, and then this super fast tech integration we see in places like Dubai and Saudi Arabia, How do you think all these different forces, market sentiment, regulation, raw technological advancement, how will they converge? How will they shape the future of digital assets and smart infrastructure over, say, the next year? What stands out most to you from everything we've talked about today? What feels like the most impactful trend? And how might that change your view of what's coming?